Okay guys, welcome back. Thanks for tuning into today's video. We're going to go ahead and get stuck right into the charts. There really is a fair bit of stuff to talk about. So without further ado, let's go ahead and get into it. Bitcoin has been in a 35-day long horizontal consolidation. Quite a large one, okay? Quite a large one. Now this consolidation zone has spanned a date and price range, like we said, 35 days, over a price range of around 11% down. If we go from down to up, it is a little bit higher. It should be around 12.5. So quite a large range in terms of, date as well as height of this range. It's quite a high and long range, meaning it's going to be quite choppy. And we've seen a lot of chop. If you just take a look at the price action from a visual standpoint, we go ahead and remove everything on the chart, you can see it has been quite choppy. So let's start from here, guys. Let's really talk about what we think is going to happen. And before we do anything, we need to overlay our major areas of support, major areas of resistance. And we have that already, so let's go ahead and bring that back up. Eliminating these black lines, you can see a few things. You can see our major horizontal supports and resistances on the chart. And we've talked about this a lot today, so we're not going to go into it too much, but I just want to quickly say these levels indicate horizontal support and resistances. The red levels indicate trigger points, meaning when we break a trigger, we expect a big move, okay? The biggest resistance on this chart for the next huge move upwards, and we're talking huge move as in we're talking like a weekly move, like a big continuation upwards to the next major zone, will occur over 20,500. If the price is able to get and hold, and that's very important, guys, get and hold above 20,500, it will and can make a move up to around 22 to 24,000. Big move, okay? Now, for us to even get into that range, for us to even retest 20,500, we will have to break through 19,800, okay? As you can see in the chart, 19,800 is that trigger for the next move up. And on the vice versa, on the downside, obviously losing 18,400 will trigger the move to that bottom. So let's go ahead and input our diagonal trend lines. When we input our diagonal trend lines, we get more of a context of the trend, because the diagonals tell us the overall trend of the price action, okay? Horizontals tell us where or where not we can find supports, where we can find resistances, where we can bounce from, different ranges to enter on, but our diagonals really tell us the overall trend. And of course, we are still in this downtrend. We are still in this downtrend. This downward sloping resistance has not been broken and confirmed above yet, okay? It's a 140-day long resistance. Let me just double check that. Pretty sure it's 140-day long. Let's take a look. 139, 140. 140-day long resistance has not been broken, okay? Now, we actually did break above this resistance yesterday. We saw a few hour period where we got above this resistance. I'm going to go ahead and zoom into a small time frame here, and you can see for yourself. We actually pushed above it, we held above it, retested it even for about 2.5 hours. During that period, it looked pretty bullish. It looked pretty good. We found that resistance, we broke the resistance, we found support, we pushed back up, we got rejected, guys. We came back down. We retested 19,470, which you would see already is that green line, that horizontal support line. Pushed back up, broke through that resistance for a second time and failed to hold. Okay, this is probably not a good thing. I'm going to say this isn't a good thing. And the reason why this isn't a good thing is because what it tells us, more specifically, it tells us there's so much uncertainty and fear in the market right now. A trend line that has spanned 140 days, one that has been retested numerous times. We're looking at a retest here, we're looking at a retest here. Big rejections from these trend lines. We broke, and as soon as we broke, the buying volume gone. No momentum to the upside, no attempt to go higher, fully dissipated. And it makes us now question the validity, or should I say, the significance of what was once considered a very important trend line and now isn't. So we're looking at this trend line now with less certainty, with more speculation. Even if we get above this trend line, will it actually matter? Because we just did and it didn't. So that is why we are still looking for these horizontals. The 19,800 is still the most important trigger. It doesn't matter what this trend line does. We're still looking at this 19,800 level. That level will confirm the move upwards to here. Breaking through here will confirm the move upwards higher, okay? We do have a new uptrending support line. we got rid of our old one and actually updated this one just to meet more data points. Obviously, we've had this uptrending support line ever since, you know, from here to here, and the price developed quite a fair bit in this range over the last, you know, we're looking at like 20 days nearly. So we decided to update that trend line a little bit, drag it down just to reach these key data points. And as you can see, we are still technically sitting above that trend line, but losing this trend line will be that trigger for that move downside. We still have a little bit of room before that occurs. Now, we do have to point out, we have a small window of opportunity in this range here. And this window of opportunity spans a couple days. It's about 3.5 to 4 days, and it ends on the 22nd of October. Now, you're probably thinking, the 22nd of October, where have I heard that before? And you would have heard that a few times on this channel. The 22nd of October happens to be the end range of our major move range here. The range of which we're going to make a decision of whether or not we're going to crash below or push above. Now, as you can see already, we've been talking about this for a very long time. We've been talking about this ever since around over here, if not before. And we said one of the possibilities were that we just push sideways. And I said that was a possibility, but it was very, very unlikely. We didn't expect it to happen. We didn't think it was going to happen. We said we were most likely going to make a move upwards, which we attempted to, but failed, or downwards, which again, we attempted to, but failed. And there's a much lower chance that we move in a sideways direction, which is exactly what happened. But the range is not done yet. We still have a few days to see exactly what's going to happen. So it's going to be interesting to see. So definitely keep an eye on that, guys. Now, of course, we have FOMO coming up soon too, which could definitely throw a spanner in the works. We've always said, doesn't matter what the chart's looking like. Doesn't matter how bullish it's looking. Doesn't matter how bearish it's looking. If economic news comes out, it can sway the market in a direction that the charts cannot predict. Okay? No technical analysis, no data can predict what FOMO is going to, or should I say, what impact FOMO is going to have on the market. Exactly. We have theories, we have methods of calculation, we have flow charts, all that kind of stuff we show you. But at the end of the day, guys, if it comes out positive and the markets look terrible prior to it coming out, it doesn't matter how bad the market looked prior to that news release can move that market upwards, and vice versa. So we have to keep in mind, guys, we have to keep in mind that is coming up soon. DXY is looking bad, guys. It's looking bad. And this is another thing. Bitcoin's dropping, DXY is dropping. What is going on? This is counterintuitive to the logic that we know on this channel, but counterintuitive to the logic that we know overall. The DXY drops, Bitcoin goes up. The dollar weakens, risk asset prices rises. We're seeing some sort of a stagnant variation of that right now, if not an opposite variation of that. We're seeing the DXY drop, we're seeing SPX drop, we're seeing Bitcoin moving sideways. A lot is going on in the markets right now, and it just adds to that I would say a hypothesis, the theory that there's a lot of fear, there's a lot of speculation, there is a lot of uncertainty and doubt in the market, and as we approach these major horizontal levels, and that being 19,000, as we approach these levels that have major support, we see much more volatility, sporadic price action, uncertainty, fear, doubt, and complete random price action in general, okay? And we're going to continue to see that until we get a significant bounce from this level or we crash below it. Your sideways price action is not just going to stop tomorrow, it's not going to stop the day after. It will continue as it has been until we make a definitive move upwards or a definitive move downwards. And that is why this range here is such a significant range, because it is telling us when that flipping point happens, when that decision occurs, when that definitive move begins. And that is why we're keeping such a close eye on this range, okay? So SXP, we've had a look at this, SPX, sorry, we've been looking at this for a little bit. Now it does look like it's been a falling expanding wedge. Of course, there's a lot of different options over here. It is in the middle of this range. So right now, longs and shorts aren't favorable. If we go to a smaller time frame, we can kind of have a look what's going on. I don't really personally like to analyze this too much. In general, stocks, I don't really like to analyze stocks too much. But what I can say, what we can take a look at, if we look at the last, say, 4 hours, right? And then we go ahead and take a look at Bitcoin on the 4-hourly chart. We'll go Bitcoin on the 4-hourly chart. We can see that in comparison to the SXP 500, Bitcoin hasn't dropped as much in the last few weeks in comparison. Take a look at this and take a look at Bitcoin. There's been a lot more steady sideways price action in Bitcoin than there has been here. And I think Wolf talked about this briefly in a video a few days ago. And I've been talking about this for a very, very long time. And I said, crypto will most likely bottom before the stock market does. And there's a whole multitude of reasons and justification that we got into that. And of course, I'm going to go ahead and let you know, we covered that in, I think it was a video, the 56-minute video on our channel, on the collab channel. You can go ahead and find that in the Wolf and Whale playlist on my channel. It would be the third most recent video. I covered it in there. So go ahead and watch that video for more information. I want to drag this video too out long. As soon as I start talking about the economy, the video turns into a 40-minute video. So I'm not going to get into it too much. But as you can see, that is very, very interesting to see, you know, the stock market's correcting still, and Bitcoin has more or less just been pushing sideways for a very, very long time. Anyway, guys, I'm going to go ahead and leave it there. Actually, before I do, let's go ahead and jump into the very small time frame. Let's jump into, you know, the 10-15 minute chart. Let's take a look at something, because I want to talk about this, and we'll leave it after this. It looks like Bitcoin's developing a descending channel. And yes, descending channels are bullish. They are bullish patterns. We expect a reversal from this. We've had a descending channel pattern developing with a fake out to the upside. Of course, that was our second breakout attempt, and a fake out to the downside. It looks like we're pushing down here. We do expect a break upwards. That would be bullish. I would not be looking for a continuation unless this level is reclaimed. Unless this green line is reclaimed, I would expect then that to continue upwards and break and potentially go up to 19,800. Until then, it is looking optimistic, but it's looking grim. It's not all over yet. It's definitely still got a chance to go upwards. I wouldn't count it that it's just going to go down right now. I think the short term is looking obviously more bearish, because when it's downward consolidation, a descending channel is a downward pattern, a downward consolidation, a downward trend. But there is a possibility if we do break out of this downward trend, we can reclaim these levels and push back up. So it's definitely something to keep in mind. Anyway, guys, I'm gonna leave it there. Remember, like, follow, subscribe, share, whatever you want to do to support the channel. You can find the links down below to our Telegram, our Twitter, everything else, and watch the videos at the end to support the channel. And I appreciate it all, and I'll see you guys tomorrow. Cheers. So we're going to quickly have a discussion about Biget. Now, if you follow the channel, if you're on our Telegram, if you're on our Twitter, if you like the content, enjoy the videos, and just find what we do informative and beneficial, go ahead and support the channel by clicking the sign up link to Biget and trade where I trade. Now, there's about 10 different good reasons why I'm suggesting Biget, and obviously I've made the swap from Binance to Biget close to a year ago now. Last year in September, I decided to go to Biget and trade on Biget, and I'm going to go through the reasons why you should actually come over and trade on Biget too. So first and foremost, guys, if you like spot trading, obviously 0% trading fees on spot. They've got over 260 coins here. Basically every popular coin you can think of is on Biget. Basically all the coins on Binance you can find on Biget. Another really good thing is it is global access, meaning there's no global restriction on who can sign up. Doesn't matter what country you're in, where you're from, you can sign up to Biget. And the reason they can do that is because they do no KYC. KYCing on this exchange is completely optional. If you want to trade on a decentralized exchange where you don't have to sign up, you don't have to have your government information in there, this is where you want to be, completely decentralized. Another really good thing is they obviously have very low trading fees for futures. It's around 0.02%. Now they have around 60 to 70 different trading pairs on futures and are adding more every couple of weeks, so it is steadily growing. They also have a security fund, so if the exchange ever gets hacked or you get hacked, you can actually request a refund or a compensation from the exchange. They have, I think it's like $80 million, or if not more, $800 million or something close to that in the security fund that actually pay out to their users if anything catastrophic happens. So obviously signing up the link, you'll get access to all of that, but there's a few beneficial and extra things you get access to if you sign up the link down below. You'll get access to the reward center. Now on the reward center, there's about 5 separate tasks, and they're trading tasks. If you complete those tasks, you can make up to $4,163 just from actually trading. And the second thing is, if you sign up with the partner link down below, you are actually registered underneath my partner account. And what that gives me availability to do is I can actually adjust your fee kickbacks depending on your trading volume. So you actually get paid to trade on Biget. You'll get kickbacks based on this trading fees you use. For example, on the 3rd of October to the 10th of October, we are doing a running campaign where 10% of the fees you pay on Biget, you actually receive as compensation as USDT directly to your account. These are some of the things I can do. I can assess your trades, I can monitor your trades if you need advice, I can actually see what is going on, and obviously the fees are very, very small on Biget. That being said, guys, that is all I want to talk about Biget. If you want a more in-depth analysis and video about Biget or how to leverage trade, go to our channel and click the video how to trade on leverage, and we talk you through Biget in a little bit more. Thanks guys, we'll see you later. Okay guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.